let's take up this case study on working capital management. Very interesting case study. And this case study is from which topic, sir? This topic is from estimation. This case study, if we talk about now, this case study is from estimation plus receivables. So these two topics combined is for this particular case study, right? Let's see that what this case study as in AR Moore LLP is a newly established startup dealing in the manufacture of a revolutionary product HDHMR, which is a substitute to the conventional wood and plywood. It is an economical substitute for the manufacture of furniture and home furnishings. It has been asked by a venture capitalist for an estimated amount of funds required for setting up a plant and also the amount of circulating capital. Now, what is this circulating capital? Circulating capital is nothing but your working capital. Circulating capital here means nothing but working capital. Required. A consultant hired by the entity has advised that the cost of setting up the plant would be 5 crores and it will require 1 year to make the plant operational. Okay, sir. The anticipated revenue and associated cost numbers are as follows. So there is a company who is going to manufacture a product. For that, they are setting up a plant. They need a certain working capital. The information is what? The units to be sold is 3 lakh square meters per annum. Now, this square meters become the unit now, right? Because the number of units is what? Like we say 3 lakh units. It is 3 lakh square meters. Sale price of each square meter is rupees 1000. Like we say per kg, per meter. Here it is per square meter. Raw material cost is rupees 200 per square meter. Labor cost rupees 50 per hour. And the labor hours per square meter is 3 hours. So if I ask you from here, can we calculate our labor cost per square meter? Yes, sir, we can calculate that per square meter 3 hours, and for every hour the rate is 50 rupees. So per square meter rate will be 150, right? Then cash manufacturing overheads rupees 75 per machine hour, and the machine hours per square meter is 2. So manufacturing cost, manufacturing overheads per square meter will be how much? 75 multiplied by 2, that is rupees 150. Because everything has to be in the square meters. The unit here is the square meters. Selling and credit administration overheads rupees 250 per square meter given, sir. Being a new product in the industry, the firm will have to give a longer credit period of 3 months to its customers. So this is what? This is your value of D, that is the debtors collection period. That how much time you take for the money to be collected from the debtors. It will maintain a stock of raw material equal to 15% of the annual consumption. So this is the information that how much of the closing stock of raw material will you keep. Based on the negotiation with the creditors, the payment period has been agreed to be 1 month from the date of purchase. So this is the value of C, that is the creditors payment period. If you remember the operating cycle, R plus W plus F plus D minus C. So this value is C, that is the creditors payment period. The entity will hold finished goods equal to 2 months of the units to be sold. So this is your value of F. Right, that at the end of the year also, in the closing stock also, and at any point of time, you have a finished goods stock that is equal to 2 months of the units sold. All other expenses are to be paid 1 month in arrears. That is for all the expenses. This is the lag period that is given to you. This is the lag period given. Cash and bank balance to the tune of 25 lakhs is required to be maintained. Okay, sir, cash balance that will come under the current assets. The entity is also considering reducing the working capital requirement by either of the two options. Now the company says we are looking at reducing this option, reducing the working capital requirement. How we can reduce the working capital requirement? Right, one of the options that they are anticipating is that reducing the credit period to the customers by a month, which will lead to reduction in the sales by 5%. Now currently they are giving 3 months to their debtors. Now what they are planning is, let's reduce this period by a month, that is reduce this period to 2 months. But then if you reduce the credit period to 2 months, will the debtors be very happy? No, sir, the debtors will not be happy. Some of the debtors will go to your competitors because you are reducing that period. If you are reducing the collection period, the credit period being given to the debtors, they will not be happy. They will go to your competitor. So they say that will lead to reduction in the sales by 5%, right? On one side you will reduce your working capital requirement, but to get that benefit of reduction in the working capital, you have to lose 5% of the sales. Second option that they are thinking of is engaging with the factor for managing the receivables, who will charge a commission of 2% of the invoice value. They say, let's hire a factor. Now factor will not provide the services free of cost. The factor will charge a commission of 2% and will also advance 65% of the receivables at 12% per annum. So 100% is not going to give. He will advance 65% of whatever the receivables are at 12% per annum. That is the interest rate given to you. This will lead to savings in the administration and the bad debts cost to the extent of 20 lakh and 16 lakh respectively. So this is your credit administration cost, which will be saved in case of factoring, if you remember the factoring part now. The entity is also considering funding a part of working capital by bank loan. Right now they say this factor is not going to give us full, sir. Some part of the working capital, let's take a bank loan. For this purpose, the bank has stipulated that it will grant 75% of the net current assets. Net current assets means your working capital, your net working capital. Right? This means your net working capital. The bank says, okay, we'll give you loan, but how much of the loan will be given? That will be 75% of your net working capital as advance against the working capital. The bank has quoted 16.5% rate of interest with a condition of opening a current account with it, which will require 10% of the loan amount to be the minimum average balance. The bank says, okay, we'll give you loan. That will be to the extent of 75% of the net working capital. You will have to open a current account in which we will deposit your loan amount. But there is a condition attached to it. If the loan is for 100 rupees, 10% of that 100 rupees, that is 10 rupees, will always be there, should always be there in your account. You cannot use the 10 rupees. We will give you loan, no issues in that, right? What is the relevance of it? We'll see. Now, the first part, the anticipated profit before tax per annum after the plant is operational. Now, to calculate the profit before tax, what we can do? Sir, simply we can prepare the cost sheet, right? We can prepare cost sheet and try to find out our profit. Prepare cost sheet, that what all expenses, how do you find the profits? Are very simple, sales and the total cost. Then the estimated current assets requirement in the first year of operation, that is calculated at cost. The net working capital requirement for the first year of operation, right? The analyzed percentage cost of two options, we'll see. So first we'll calculate profit, then we will prepare the working capital statement to find out this value of current assets and to find out the value of working capital. Clear? Now do one thing, pause the video here, go through the case study once. Go through the case study once very clearly, right? Okay, now we'll start with the preparation of cost sheet. The first part is calculation of profit. So I'll start with the first part, that is the calculation of profit. So first part is calculation of profit. Right, so this is our first part. Now for the profit, what do you need? You need all the cost. What is the first cost that you take in the cost sheet? That is your material cost. What is raw material cost given? The raw material cost is given as rupees 200 per square meter. Okay sir, I'll take the raw material cost as the first cost, right? I'll write raw material. Fine sir. Raw material is given as rupees 200 per square meter. Now you will multiply this 200 with how many square meters to get the total raw material cost? Think about it. Think in your mind that how many square meters will you take on which the raw material cost has been incurred. Now, if your mind has given the answer 3 lakh, if you have given yourself the answer 3 lakh, that is not correct. Why, sir? Why? Read this line also. The entity will hold the finished goods equal to this much. Now, what is the relevance of this? Try to understand. The company says in this 1 year, we are going to sell 3 lakh units, right? 3 lakh units. At the same time, the company says here we want to keep a closing stock of finished goods. Closing stock of finished goods. How much? That is 2 months stock of the units sold. That means unit sold is 3 lakh. In the complete year, it is for 12 months. So what will be the 2 months stock here? That will come to 50,000 units. Now tell me, the raw material cost of this 200 will be incurred only on 3 lakh, or the raw material cost will be incurred on 3 lakh which are sold and 50,000 units which are there in the closing stock in the godown. So raw material cost is incurred on these units also, na, which are there in the godown. Obviously, that's why they are the finished goods. Raw material cost is incurred. 3 lakh units is what you have sold. 50,000 is what is the stock that you are keeping. 2 months equivalent to the sale units you will be keeping in the stock. So raw material cost will not be incurred on 3 lakh. The raw material cost will be incurred on 3 lakh 50,000 units, right? So raw material cost will be what? Raw material cost will be 2 lakh multiplied by 3 lakh 50,000 units, right? So that comes to 7 crore. Is that clear? Now this is a very important point here, right? This is a very, very important point, that whether it should be 3 lakh square meters or it should be 3 lakh 50,000. Now second cost, let's come to the second cost, that is labor cost. Labor cost we have calculated is rupees 150 per square meter. Again, on how many square meters? That is 3 lakh 50,000. So that comes to 5 crore 25 lakhs. Next cost, raw material, labor, then we have manufacturing overheads. Manufacturing overhead, the cash manufacturing overheads are given, that is again 150 per square meter. So again we will take it that this way, again 150 multiplied by 3 lakh 50,000 units, that comes to again 5 crore 25 lakhs. I hope this much is clear to you, right? So this will give me what? This will give me the total cost of production. This will give us what? This will give us the cost of production. Cost of production. So how much will be the cost of production? That will be 17 crore 50 lakhs. This will be 17 crore 50 lakhs. Now, what is your next step? What is your next step when you are preparing the cost sheet? After the cost of production, what do you take? 7 crore plus 525 plus 525. From here, you will subtract your closing stock of finished goods, isn't it? Closing stock of finished goods. How many units as the closing stock of finished goods? We have just seen here. That is this 50,000 units. So we'll write 50,000 multiplied by now the value per unit. See here, if I calculate the per unit value here, 200, 150, 150, total 500 is the cost of production per unit. Total 500 is the cost of production per unit. Now it is a newly established manufacturing company. There will be no opening stock. It's only the closing stock from the fresh production, right? So this will be valued at what? This will be valued at 500, right? So this will come to 2 crore 50 lakhs, right? From here, what you will get? From here, we will get our cost of goods sold. Just remember the cost sheet, sir. Cost of goods sold, that comes to 15 crores now. Now to this cost of goods sold, what will you add? You will add your selling and credit administration overheads, that is given as 250 per square meter. Now this 250 will be multiplied by what? 3 lakh units or 3 lakh 50,000 units? I've told you in the cost sheet also that when it is the selling expenses are taken on how many units, whether the number of units sold or whether the number of units manufactured. Sir, credit selling administration overheads will be on the number of units sold, right? So I will add here what? I will add here selling overheads. I will write here selling overheads, that is 250 rupees per square meter multiplied by 3 lakh now, not 3 lakh, 50,000, right? So this will come to 7 crore 50 lakhs. This will give me what? This will give me my cost of sales, that is 22 crore 50 lakhs. Now, I want to calculate what? I want to calculate profit. Can I calculate the sales here? Can I calculate the sales here by any means? Yes, sir. The sale units are given, that is 3 lakh. 3 lakh sale units, and what is the selling price per unit? That is 1000. So we can calculate sales. Now, sales will be calculated as what? 3 lakh units sold multiplied by per unit is 1000. That will be 30 crores. So what is your profit here? Now what is your profit here? Profit here is 7 crore 50 lakhs. This will be your profit. And if I want to calculate per unit, right, your cost of production we have taken, cost of goods sold, what is your selling and distribution overheads? That is 250. So what is your total cost of sales? Total cost of sales is 750. Selling price is 1000. So profit is 250. Sir, why are we calculating per unit? You will get to know slowly. Don't worry about it. Right. As of now, in the first part, what they were asking for? They were asking for the profit. The profit comes out to be 750 lakhs. Let's see what option do we have. Do we have the option? Yes, sir. Option A, that is 750 lakhs. Is that clear? So this is your profit statement that is required to be prepared. I hope this part is clear. So be very careful with the part that I have told you, that the material cost, labor cost, manufacturing overheads, these are to be taken on the number of units produced and not on the number of units sold. Whereas the selling cost and the credit administration cost is to be taken on the number of units sold and not on the number of units produced. Right? So please keep highlighting all the important points which are there where you people might commit a mistake. Clear? So with this, first part is done. Now for the second and the third part, what we are required to do is, we are required to prepare the statement of estimation of working capital. That is what is required. So let's prepare it, sir. Without wasting any time, for second and third part, what we are going to do is, we are going to prepare a statement of estimation of working capital. Statement of estimation of working capital. Okay, let's see. First thing that we have to do is raw material. Yes, first we take here is raw material, that is current assets. Now, what is the information given regarding the raw material here? Let's see how much of the raw material you will be keeping in the current assets. Now, remember from the balance sheet point of view, when you write current assets, in the current assets you take inventory. Which inventory do you take? Whether it is the closing inventory, whether it is the opening inventory. Sir, in the current assets we always take what? The closing inventory, isn't it? So closing inventory, they say how much of the inventory you will maintain? Clearly mentioned that it will be 15% of the annual consumption. So how do you know how much of the raw material is getting consumed? Sir, that we know from the cost sheet, that 7 crores of the raw material is going to be consumed. So how much of the closing stock you will keep? That will be 15% of this annual consumption. So raw material you will take here is, raw material here will be 15% of 7 crores. Right? That comes to 1 crore 5 lakhs. Sir, is there any WIP given in the question? Anywhere WIP is there? No, sir. WIP is not there. Start dancing, sir, when the WIP is not there. That is one of the biggest blessing in the question if the WIP is not there. Right? You should start dancing straight away. Sir, WIP is not there, sir. Wow, sir. Right? Okay, fine. Next, finished goods. Now, what we have for finished goods? Let's see. Finished goods, sir, already calculated, sir, finished goods. Where? Sir, this closing stock. Again, I am saying in the current assets, what do you take? You take the closing stock of the finished goods, you take the closing stock of the inventory. So this is a part of your inventory. What you will take? The closing stock of finished goods. Closing stock you have already calculated here, that is 2 crore, 50 lakhs. No other calculations required. So I will simply write 2 crore 50 lakhs. Next I have is debtors. Now see, debtors can be calculated either on cost of sales or on the sales. Read here what is given. Debtors calculated at cost. Clearly mentioned in the question that it has to be calculated at cost. And to the debtors, what is the period that you are giving? 3 months is the period, and your cost of sales is 22 crore 50 lakhs. Right? So can we calculate it as 22 crore 50 lakhs? Sorry, 22 crore 50 lakhs multiplied by 3 by 12. So this will come to 5 crore 62 lakh 50,000. 5 crore 62 lakh 50,000. Anything else to be taken in the assets? Yes, sir. Cash balance is also there. They are saying a cash balance of 25 lakhs is to be kept. Fine. We'll take 25 lakhs. Any prepaid expenses? No, because they have clearly mentioned in the question that all the expenses will be paid 1 month in the arrears, that is with a lag period. So that means from here we can have what? From here we can have our total current assets. Total current assets, or what we call it as gross working capital. Right, so this will come to 9 crore 42 lakh 50,000. 9 crore 42 lakh 50,000. Right, so this is what is there regarding the current assets. Now let's come to the working capital calculation. For working capital calculation, what you will subtract from here? From here you will subtract your creditors for raw material. You will subtract creditors for raw material. And I told you, whenever there are creditors for raw material, what is the first thing that you will see? The first thing that you will see is whether it is a new firm or it is an old firm. Clearly mentioned here that it is a newly established startup. So in case of newly established startup, when you will take the creditors for raw material, what will be your purchases? Your purchases will be equal to consumption, that is annual consumption, plus how much? Plus closing stock. Consumption plus closing stock. So this will be your purchases, right? So what is the consumption now? Consumption is given as 7 crores. We have already calculated. This is your raw material consumption. And what is the closing stock? Sir, in the statement of estimation, when we have calculated this raw material, this will serve as my closing stock. This will be your closing stock, and the 7 crores will be your consumption. This will be your total purchases that you will take for the calculation of creditors for raw material. So how will you calculate it? You will calculate it as 7 crores. 7 crore plus what is the value here? 1 crore 5 lakhs. Right, 1 crore 5 lakhs. And what is the credit period given? That is 1 month, I guess. Yes, sir, that is 1 month. Right, so this comes to how much? Just calculate and see, the value will be 67 lakh 8,333. This is the value that I am getting. Right, just check it once. I think this is the value, correct value. This is what is there. Now, next thing that you will take is creditors for expenses. Next you will take is creditors for expenses. Now, in the expenses, what you will take? You will take the labor cost. What you will take in the expenses? You will take labor cost, manufacturing overheads and selling overheads. right? So 10 crore 50 lakhs plus 7 crore 50 lakhs, that is 18 crore of expenses. Why? Because for expenses the lag period is same, that is going to be 1 month, right? So we can take it in total expenses will be 18 crore. How 18 crore? Labor cost, listen to it very carefully, labor cost plus manufacturing overheads plus selling overheads, right? So 18 crores, and the lag period is given as how much? The lag period is given as 1 month, right? So this will come out to 1 crore 50 lakhs. This will be 1 crore 50 lakhs. Anything else? No, sir. Nothing else. From here, what you will get is your net working capital. You will get your net working capital. Right, the net working capital will be 7 crore 25 lakh 41,667. So this comes to be your net working capital, the statement of estimation of working capital. Is that clear, everyone? All the small calculations, the basic calculations are basic, you just need to do it very carefully. Let's try to answer the second and third MCQ now. The second MCQ is 9 crore 42 lakh 50,000. That was the total of current assets, and the net working capital is coming out to be 7 crore 25 lakh 41,667. That is option C. Now coming to the fourth MCQ. The fourth MCQ says that the annualized percentage cost of the two options for reducing the working capital. Now, what is the meaning of this? First, try to understand what is the meaning of this percentage cost of two option. He says, what are the two options? The two options says you will reduce your working capital. That is a benefit to you, right? Your working capital requirement will reduce. That means you have the available cash with you. That is why your requirement for working capital is coming down. But to get that benefit of reduction in the working capital, you will have to bear a certain cost. Again, I am saying, I am repeating it again, that to get the benefit of the reduced working capital, you have to bear the cost. That is what we need to calculate here. He says, what is that percentage of cost that we have to bear to get that benefit? To get that benefit under the two options. What are the two options? One is the debtors option, another one is the factoring option. Let's try to decode the debtors option now. The debtors option has two things. One, the credit period will be reduced to 2 months, right? Second, there will be a loss of 5% of the sales. Let's try to decode this debtors option first, right? First, we'll talk about the debtors option. Debtors option. Now, first I'll say, what is my savings in the working capital? If I reduce the credit period, how much money I will save in the working capital, right? How much it will be a reduction. Let's say, what is the current credit period? What is your current credit period given to you? Current credit period is given as 3 months. Yes, sir. Current credit period is given as 3 months, right? So, what is your current investment in the debtors? What is your current investment in debtors? Sir, what does it mean? Investment in the debtors, current investment in debtors, what does it mean? It means you have a total cost of sales of 22 crore 50 lakhs. So what is the cost for this period? For 3 months, what is the investment? Because after 3 months, you are going to collect the money, right? So at one point of time for working capital, what is that amount? That comes to 5 crore 62 lakh 50,000. This is your investment in the debtors under the current situation. Now, what will happen under the proposed situation? Now we say proposed debtors period. Proposed debtors period. That is equal to 2 months. Now, what will happen, sir? He says your sales are coming down by 5%. Yes. If your sales are coming down by 5%, then this cost of sales will also change. Yes or no? Obviously, sir. If your sales are coming down by 5%, your cost of sales will also change, because then you will be manufacturing less number of units. You will be selling less number of units, so everything will change. Now, what is the proposed debtors period? 2 months. What is the impact of this reduction in the 2 months? That is your new sale units. New sale units. New sale units will be how much? 3 lakh existing units and 5% decline in the sales. That comes to 2,85,000 units. Now, can you tell me the revised cost of sales? Now, what I want to know is here the revised cost of sales. Revised cost of sales. Sir, why do we need the revised cost of sales? Because we need to calculate this investment in the debtors again, and for that we will need this cost of sales. Which one? Not the old one, now the new one. How will you calculate? See here. Here you have calculated that for every 1 unit, what is your cost of sales? For every 1 unit, 750. That is why I calculated this per unit column also. For every 1 unit, your cost of sales is 750. Now, for 2,85,000 units, that is the new number of units. 2,85,000 units multiplied by 750. This will be your new cost of sales. That comes to 21,37,500. Right? Now calculate the revised investment in the debtors. Revised investment in debtors. What is our revised investment in debtors now? That is 21,37,500 invested for how many months? For 2 months. Right? For 2 months. Now the money blocked in the debtors. Investment in debtors means what? The money is stuck in the debtors till the time you are receiving that money. That comes to 3,56,020. 3 crore 56 lakh 25,000. Sorry. 3 crore 56 lakh 25,000. That will be your revised investment in the debtors. That means your earlier investment was how much? Your earlier investment was 5 crore 62 lakh 50,000, and your revised investment is what? 3 crore 56 lakh 25,000. Now you have saved money here. What is your savings in the investment? Now I'll write your savings in investment. Savings in investment. So what is your savings? That is, earlier investment was 5 crore 62 lakh 50,000. Revised is 3 crore 56 lakh 25,000. So that means a savings of 2 crore 6 lakh 25,000. But now what I am saying is, to get the savings, there is a certain cost that you have to bear, a certain loss that you have to bear. What is that loss? Sir, you are losing out on the 15,000 units. Yes, sir. On those 15,000 units, you are losing what? You are losing this 250 of profit. This is the loss that you have to bear to get that benefit of 2 crore 6 lakh 25,000. To get the savings, there is a loss that you have to bear. So what is the cost here? Cost here that you have to bear is loss of profit. Loss of profit on reduced sales. On reduced sales. What is that loss of profit? That comes to, on 15,000 units, 250 per unit is the profit that I am losing. That is rupees 37 lakh 50,000 is the loss that I have to bear. Now what they are asking for is, to get this savings, this is the cost that you have to bear. What is the percentage annualized cost? Percentage annualized cost. That comes to 37 lakh 50,000 for a benefit of 2 crore 6 lakh 25,000, correct? Multiplied by 100. So this will come to 18.18%. Right? So whenever, anywhere you see this word, what is the percentage annualized cost? That means you have to calculate that what is the cost that you have to bear to get a certain benefit. Now, if you look at the options of this part 4, there is only one part with 18.18%. So from here, the answer we have found. The answer is 18.18%, fine, sir. But there is another one, 16.92%. That is the factoring option. Otherwise, in exam, if you get this, you are getting with just one solution, you are getting the answer, just tick it and move forward. No need to calculate for factoring option. But here, I will tell you how to deal with the factoring option also. Right? 18.18%. If you are confident that you have done it correctly, fine, sir. No need to do the factoring option. Just mark 18.18%, move ahead to the next part. But here I'll tell you, we have done the debtors option. Now here itself I'll tell you the factoring option also, that how to do the factoring option. Read the factoring option once. Let's read the factoring option once, that what are the things given regarding the factoring. He says the factor will charge a commission of 2%. Okay, sir. He will give 65% of the receivables at 12% interest. Fine, sir. And this will lead to savings in the cost. 20 lakhs and 16 lakhs, total 36 lakhs annually will be saved. Right? So commission is one thing, advance money he will be getting, and interest is to be paid. Now what is the cost here? The cost says what is the cost that you have to bear to get that money in advance. Right? Let's try to solve this now. Factoring option, let's try to solve that. What are things are there? Now in one go, what will be the amount that will be managed? Now I'll write amount to be managed. Amount to be managed. Now factor will manage how much? If your annual sales are 30 crore rupees, that we know that it is 30 crore, he will manage only how many months? 3 months sale at one point of time, because 3 months is the credit period. So he will manage at one point of time, he will manage only 3 months sale. That comes to 7 crore 50 lakhs. Right, now the factor says, sir, I will charge commission on this. Okay, I say, okay, you will charge commission because nobody is going to provide services free of cost. So commission will be 2% of this 7 crore 50 lakhs. That comes to 15 lakhs. This commission comes out to be how much? 15 lakhs. Correct. Now, what will be the advance money? Let's see what is the advance money. What is the advance money? He says 65% of the receivables. Careful here. Receivables are how much? Receivables are 7 crore 50 lakhs. So, of this 65% will be granted. Right. So, this will come to how much? 4 crore 87 lakh 50,000. On this advance money, he will be charging interest at the rate of 12%. Yes, sir. Interest cost, that means on this 4 crore 87 lakh 50,000, he will charge 12%. But for how much time he will charge? He will charge only for 3 months. For the period that he is going to manage those receivables, he will be charging this for 3 months only. Right, so this will come to 14 lakh 62,500. Now, if you see one thing here, this commission is for how many months? This commission is for 3 months. This interest is for how much period? This interest is also for 3 months. Now, the third element that we are going to take here is savings. Savings is how much? The savings is 20 lakhs of saving one plus 16 lakhs of another saving in the bad debts and credit administration cost. Total 36 lakh of saving. But if you look at one thing here, this 36 lakhs is for 12 months. That is for the whole year. Now, if I want to calculate the net cost, what will I have to do? I'll have to convert the savings for 3 months. Next, I'll calculate what will be the savings for 3 months, because cost you are taking for 3 months, so the savings should also be for 3 months, right? So it will be 36 lakhs multiplied by 3 by 12, right? So that comes to 9 lakh rupees. Now this is for 3 months. What is the purpose here now? Understand the purpose. The purpose says that to get this advance money, of 4 crore 87 lakh 50,000, this is a benefit to the businessman, right? Otherwise, he would have got this money after 3 months. Now he is getting the money today itself. To get this and use this money of 4 crore 87 lakh 50,000, what is the net cost that he has to bear? So what is the net cost here? What do you mean by net cost here? Net cost here means the commission cost. What is the commission cost? That is 15 lakhs plus the interest cost of 14 lakh 62,500 minus the savings of 9 lakh. This will give you the net cost that he has to bear. That comes to 20 lakh 62,500. So the businessman says to get the benefit, what is the benefit here? That you will get the money today itself instead of 3 months. What amount of money? 4 crore 87 lakh 50,000. You will get it today itself. To get this benefit, what is the cost that you have to bear? 20 lakh 62,500. So what is the percentage cost? That is 20 lakh 62,500 divided by 4 crore 87 lakh 50,000 multiplied by 100. That comes to 4.23%. Now, is it the answer? Is it the annualized cost? No, sir. This cost is only for 3 months, because the commission was for 3 months, interest for 3 months, savings for 3 months, that advance money is also for 3 months, right? So this is a 3 months cost. If I want to calculate the annualized cost, what will I do? I'll multiply it with 4. That comes to 16.92%, right? Why 4, sir? Sir, 3 months, 3 months, 3 months, 3 months, 3 months, quarterly, right? So option A, 16.92%. So this is regarding your factoring part. Amount to be managed, commission, advance, interest, savings, and then we calculate that what is the net cost that you have to bear to get this money of 4 crore 87 lakh 50,000 in advance. I hope this is absolutely clear now, right? No doubts should be there. So I have given you both the solutions. Now, last part of the question. What will be the maximum permissible bank finance by the bank and the annualized percentage? Now, the bank says, what will I give? The bank says how much finance they can give. They can give 75% of your working capital. So what is the working capital here? That is 725,41,667. So bank will give 75% of 7 crore 25 lakhs 41,667. So that comes to 5 crore 44 lakhs 6,250. So from here itself you can say option B, sir. Straight away you can mark option B. But the second part says what is the annualized percentage cost of the same? Again, what is the meaning? The meaning remains same. Sir, to get this money as a loan from the bank, what is the cost that you have to bear? Now, if you are taking a bank loan, what is the cost that you have to pay for the bank loan? The cost that you have to pay is interest on that bank loan, isn't it? So what is the interest cost here? The interest cost here is 16.5%. Oh, sir, 16.5% is not there in the option. So that means the ICAI has committed a mistake, sir. No, ICAI has not committed a mistake here. Try to understand. Try to understand what the bank is saying. Bank says, okay, I'll give you a rupees 100 loan. On that 100 rupees loan, I will charge 16.5% interest. That means what is the interest amount that is paid? That is 16.5 rupees, isn't it? On the 100 rupee loan, 16.5 is what? The 16.5 is the interest amount. The bank has another condition. The bank says out of this 100, you cannot utilize the 10 rupees because that 10 rupees should always be there in your current account. Read that line very carefully. It is given in the question that 10% should be the minimum average balance. You cannot use that 10 rupees. So how much money you can use? You can use only 90 rupees. So that means to use this 90 rupees, you have to pay an interest cost of 16.5 rupees. Now calculate the cost. 16.5 rupees is the cost for using 100? No, 90 rupees multiplied by 100, right? So this comes to 18.33%. This is the meaning of annualized percentage cost of The same, that is to use a certain amount of money to get a certain benefit. What is the cost or what is the loss that you have to bear, right? So we are here done with this case study on working capital, which was a very good case study. And I tell you, working capital is one of the favorites when it comes to the case studies the ICAI has been asking, right? So please work on the small concepts. That is going to be the key, right? So with this, the working capital case study is done.